You've been running around, throwing that dirt all on my name. Cause he knew that I knew that I'd call you up. You've been going round every party in LA. Cause he knew that I knew that I'd be at one. I know that dress is karma, perfume regret. You got me thinking about when you were mine, hey. And now I'm all upon you, what you expect? But you're not coming home with me tonight. You just want attention, you don't want my heart. Maybe you just hate the thought of me with someone new. You just want attention, I knew it from the start. You're just making sure I'm never getting over you. Run around, throwing that dirt all on my name. Cause you knew that I knew that I'd call you up. Baby, now that we're right here standing face to face, you already know that you won. I know that dress is karma, perfume regret. You got me thinking about when you were mine, yeah. And now I'm all upon you, what you expect? But you're not coming home with me tonight. You just want attention, you don't want my heart. Maybe you just hate the thought of me with someone new. Yeah, you just want attention, I knew it from the start. You're just making sure I'm never getting over you. I know that dress is karma, perfume regret. You got me thinking about when you were mine. And now I'm all upon you, what you expect? But you're not coming home with me tonight. You just want attention, you don't want my heart. Maybe you just hate the thought of me with someone new. You just want attention, I knew it from the start. You're just making sure I'm never getting over you. What are you doing to me? What are you doing? What are you doing, ma? What are you doing to me? What are you doing? Yeah, you just want attention, I knew from the start. You're just making sure I'm never getting over you.
When you hold me, there's a place I go. It's a different high. Oh no. When you touch me, I get vulnerable in a different light. Oh no. I used to see the call to believe in a miracle. Let you slip through my hands, but could you take a chance on me? Can you forgive it all? To believe in a miracle. Yeah, I'll put you through hell, but I'm asking you to believe in a miracle. To believe in a miracle. When you hold me, there's a place I go. It's a different high. Oh no. When you touch me, I get vulnerable in a different light. Oh no. I used to see the call Don't you worry about nothing, cause we get the fire, and we burning one hell of a something. They gonna see us from outer space. Light it up, like we're the stars of the human race. When the lights turn it out, they don't know what they are. Strike the match, play it loud, giving love to the world. We'll be raised,
Alrighty, good morning, good morning, good morning.
cause we got the fire, fire, fire. Yeah, we got the fire, fire, fire. And we're gonna let it burn, 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 burn. 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 We're gonna let it burn.
Oh, sort it says, let me guess, 2026 becomes 2027, 2028. Oops, we met. Hey, I've been very, very consistent on my views. I have no idea what you're talking about. No idea. Just setting up some charts for you guys so we are a tad bit more organized. Give me a quick mic check.
We got the love, there's no sleeping now, no sleeping now. When the lights turn it out, they don't know what they are. Strike the match, play it loud, giving love to the world. We'll be raising our hands, shining up to the sky. Cause we got the fire, fire, fire. Yeah, we got the fire, fire, fire. And we're gonna let it burn, 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 burn. We're gonna let it burn, 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 burn.
Also, is the music too loud? I'm gonna turn down the music a tad bit. Alright, let's just jump right into it. Good morning, good morning, good morning, good morning, good morning, good morning. My name is Sean X. Welcome you back to a Mango live stream. I'm gonna be Hey, how's it going? Tan, good to see you in here. Michael is in here too. Core and Krisha, the gorgeous, the beautiful, the one and only. And hey, the World Cup is around the corner. Are you guys excited? No one seems excited for the World Cup at all. At all. It's ridiculous. It's been a while indeed. Everyone is doing great. Mango community has been killing it. I want to talk about a few things that might be in contrast with what I discussed in the previous live stream, but not entirely. I just want to get people's mindset in the right place. But I'll be starting with a couple of opportunities. I'll be giving guys a quick update on gold. I haven't spoken about gold in me personally. I haven't spoken about gold in what, a year? Longer actually, right? I haven't really. It's been on a tear. The last time we discussed it was when it was actually at biddable levels. If you were looking to position for the long term, now we might be approaching something very, very similar. So I'll be giving you guys my thoughts on that. I'll also be giving you guys my thoughts on our quantum position that we built all the way last year, and we kept adding on every dip. We've been building and building and building. I'll be giving you guys my update on what I'll be doing with that moving forward, considering it's been on such a huge tear. I am changing something over there. So those of you who've been following me on that trade, you may want to listen to that bit. And then we're going to be discussing Bitcoin, Hype, Cardano, XRP, and I'll take a few altcoin requests and we'll wrap up. Okay. So let's begin. I want to begin with this tweet right over here. Can you guys see my screen? I think so. So this guy over here, the journeyman, says, I have no dry powder left. I thought about taking a Bitcoin loan. I thought about taking out a loan, but I hate leverage. That's how people lose their Bitcoin. Now I'm staring at my $10,000 emergency fund and I'm wondering if a 50% drawdown is actually an emergency. I am going to turn down the music a tad bit more because I think this is really, really important, and we shouldn't be. We should take this a tad bit seriously because I don't want people making mistakes. Right? He says part of me says Bitcoin at $60,000 is an emergency. Be honest. Are you touching your emergency fund to buy Bitcoin here? or am I completely out of line? My quick answer as a Bitcoin bull to him is you are completely out of line. I think this is a FOMO mindset more than a I am going to be playing against my fear, playing against my discomfort, and I'm going to lean into the fact that I'm really uncomfortable and I'm going to be deploying cash. Because if you are out of dry powder, it means that you were chasing returns throughout the drawdown, right? You weren't really holding back at all. You were actually comfortable buying this entire time to the point where you are out of dry powder, and that's exactly the times where the market goes and punishes you, right? So usually, if you were really uncomfortable and you did not want to buy, but you couldn't stomach buying anymore, where it's just like, holy shit, this is, I've lost too much, I can't lose anymore, I'm not going to buy, I'm not touching this, I'm out. That's when you should actually be leaning in to okay, you know what, the plan was to buy here, so I'm going to buy here, right? Now it's a different story if you had set out to buy here a while ago. If you tell yourself, I'm going to wait for the weekly 200 moving average, or I'm going to wait for $60,000 Bitcoin because it's a 50% drawdown, and I'm not going to buy until then, right? And then price comes down there, and then you're tapping into whatever emergency fund. I would treat it differently. I wouldn't say you're completely out of line. Over here, this is you being completely out of line. I'm not him. If anyone else is following the same mindset, you should not be tapping into emergency funds at this juncture at all. This is not emergency prices. Guys, Bitcoin is only down 50% from the highs. And yes, I made the argument just on the last live stream that we did not rally all that much to begin with for it to necessitate a deeper drawdown. It's not that we can't have a deeper drawdown though, right? We definitely can. And that's the point I'm trying to make over here. These are not emergency prices where you need to FOMO and tap into your actual emergency fund. Those emergency funds are for when you actually have an emergency. Bitcoin's not at emergency prices. Bitcoin is at opportunistic prices that will likely pay off in the long term. But I would say if Bitcoin, like let's say, gets to 25K, that's when you tap into emergency funds. Okay, 35K as well, right? Not here. That's not me saying I don't think Bitcoin's not going to bounce here. Bitcoin's not bottoming. I'm not saying that. I'm just saying that the mindset of tapping into, you're leveraging yourself over here, right? And this is another bad mindset, guys. When you say things like I hate leverage, you cannot have that kind of negative mindset towards leverage. You are actually going to get yourself into far more trouble by thinking this way. You can use leverage to protect yourself if you use it right. If you are tapping into emergency funds, that's you actually leveraging your life, right? Because when things go wrong, your emergency funds are a guarantee liquidity well that you can tap into immediately, and it's guaranteed, right? You having to go to the bank, get a LOC or get a loan when an actual emergency hits you is not guaranteed, right? So you are in a way leveraging. You're much better off if you actually want to put on a Bitcoin position, leave your emergency funds aside and go to the bank and pay that 8% interest, 10% interest, 6% interest, whatever the bank gives you, right? And use that leverage instead because it's safer. Because what's the worst that's going to happen? You're going to miss a monthly payment because you're not mark to market. The bank's not going to come and take your Bitcoin away from your wallet if you don't make a payment. Right? They'll add a penalty. I've never done this, so I don't know. But I'm pretty certain that's how it works, right? They're not going to come knocking on the door and say, hey, fork over the Bitcoin. You missed the payment. And that's the thing. You're not going to wake up one night either and be like, oh, Bitcoin wicked and liquidated me. None of that is a risk, right? None of that is a risk when you're going and borrowing from the bank and taking a loan. So when you're actually when you're actually saying it out loud, I was thinking about taking a loan. You're not saying I'm going to go on margin on an exchange. That's an actual risk where you wake up and you could get liquidated, right? Well, compare the two. you could be taking a loan from the bank, right? $10,000 and buy Bitcoin versus tapping into your emergency fund and buying Bitcoin. Now, where's your overnight risk really? Your overnight risk is actually on what you deem as safe, tapping into your emergency fund. Think about that, because you could actually wake up and something go wrong in your life and you need that 10K and you don't have it on hand, right? Your overnight risk is actually over here. So think about things. I don't want any of you guys in the Mango community to have this kind of dogmatic view against leverage or for leverage, etc. Just be balanced in all things in life. And you can use leverage very safely. You can use leverage to defer counterparty risk. We talk about this over and over again in the seed program. We have an entire section on this in the risk management module, how to use leverage to protect yourself in a deeper way, right? So with that ramble out of the way, I was supposed to spend like 2 minutes on this topic, and there I go again, spending like, 15 minutes on this already? Okay. So this actually allows us to transition well into why I don't think this is a good time to be deploying your emergency funds, right? Most definitely. Taking a loan, that's all on you. Make sure you're doing it safely, etc., because you're not going to be mark to market. Another thing is, I do not think anyone should be going leverage long on Bitcoin over here. In the Mango Seed private chat, someone did ask this question in regards to putting on a long, leverage long on Bitcoin, I think specifically. Bitcoin. And having a tight... It was an ongoing discussion between three or four of us, where I replied to someone else saying I would not recommend longs on Bitcoin, leverage longs over here on Bitcoin, right? Spot for the long term is completely fine. In fact, I'm doing that too. I'll talk on that a little bit. But leverage longs on Bitcoin, I do not recommend. Someone asked, what if it's a tight stop on the lower time frames, 5x leverage? And honestly, guys, if you're going all the way up to 5x leverage, you should not be putting on longs. You should be your mindset should be this. If I'm willing to put on 5x leverage, 10x leverage, or I want to put on 5x leverage, I want to put on 10x leverage, you only look towards the short side. If you're hesitant or you're not comfortable shorting, just do not look for leverages here. You cannot have both ways. You cannot say, I'm going to put on 5x leverage and 10x leverage and I only want to long. You can't have that way. That's not Mango. That's not easy. That's not stress-free. To keep it easy, keep it stress-free, you long in the direction of the trend. And the dashboard is telling you right here, across the market, again, if you look at market-wide trend on the weekly, short. Market-wide trend on the 4-day, short. You're looking at the top right-hand corner over here. 2-day, short. Daily, short. 12-hour, short. 4-hour, short. 4-hour, neutral. Okay, fine. But that's not enough reason to put on a long position when you have everything in terms of trend going against your leverage, right? 2x leverage, okay, fine, you might be playing the weekly, you're going to give yourself enough time, 50% drawdown before you are at risk of getting liquidated, you can add in more margin, etc., etc. 5x, a 20% drawdown, you're out of your position, and you want to play against this entire thing going against your trend? No, you short. You want to play in the direction of that trend when you're leveraging 5x and above. If you don't want to go short, then don't 5x leverage, right? So that's how I see it. Similarly, you use that same mindset over here. Should I be tapping to my emergency fund over here? Well, this is where it gets a little bit nuanced, and you need experience for this, okay? I broke this rule, and I made a lot of money during the COVID dump. Right, I was bearish though, leading into the COVID dump, and prior to the COVID dump, I was bearish, and I was completely, my mindset was completely free in that I did not have any long positions. I was completely out of my long positions. In fact, I had hedged short positions, so I was feeling good, and I was able to long into that massive panic. That was emergency prices, right? That was emergency price. And even when I did that on Deribit, my freaking heart went into my throat, or my freaking heart sunk down to my... It was like so many emotions going through me at that time, because I remember the order books, literally, I could see the numbers jump from like the top orders, guys. 3,200, 3,400, 1,600. The next order, I could see 1,600 right there on the order book. I'm like, holy crap. I could have gone liquidated over there if prices just went whoop, right? Could have wicked into that bid. Thankfully, it did not happen. But I remember seeing that order book. I was like, holy shit, because I had a sizable position too. I was leaning into that panic that the market had. Those were emergency prices, right? So yeah, I don't recommend that. I don't think I'll do that again myself because I experienced that. I've gotten away with murder twice in my trading career. One was that COVID dump, and another time was over here. Core, if you're here in the chat, you probably remember that phase, right? At around 11,600-ish or something, I added. We got a huge dip into a key level, and I over-levered myself without realizing. I was really tired, and again, I got away with murder. I could have lost. I had a huge win that entire rally, and I could have lost everything on that one move, right? So sometimes you're going to get away with murder. That does not mean that you're God. You have to like, I want to survive to be able to put on trades for the long term and capture. You may not get those huge, exhilarating wins in a single night, but you'll get them over like weeks and months. So, yeah, do not go ultra leverage against the trend is what I am trying to say, because then you're not going to get away with murder. I was able to get away with murder on that 11K dump, Bitcoin 2019, because the trend was in my favor. If that just kept going really quick because of the sell pressure, I could have lost like 6 months of gains in one bad move. All right, any questions before I go further? Easy Shorter says this is very underrated advice. No one's going to give folk this kind of advice because it doesn't get them likes, it doesn't get them views, it's not comfortable stuff that people, it's not feel good stuff that people want to hear. World Cup sounds like a very large beverage utensil. If you could touch on Oracle and Tesla, okay, yeah, I'll do Oracle and Tesla as well. I'll make sure to keep a note so that I don't forget. Give me a sec. And in case I forget, please poke at me. Yeah, it's not the Wolf of Wall Street stuff that... what I'm trying to do for you guys over here is give you guys the secrets of the trade that nobody else talks about in regards to using your patience at the right time, getting aggressive to build massive wealth. And guys, now more than ever, crypto is going to give you that opportunity. Now more than ever. You guys don't hear me excited about altcoin opportunities often. When was the last time? This entire like 3 to 4 years, 3.5 years at the very least, you guys know I was very anti altcoin narrative, and I said maybe the next cycle we can start leaning into that again, right? Well, that I had to like hit myself in the head too and said, Sean, this is it now. You're seeing the signs. You're seeing the signs that you did not see last cycle. Some of these things are surprising you as well, and you even prepped for this whilst you said it out loud to the community that maybe it's the next cycle that you got to prepare for, right? Oh, Gonza is MM Master. I had no idea. Good to know. So those of you who are using different names from your Discord, let me know so that way I can give you guys advice based on what I know about you guys. Okay, I think I talked about why Bitcoin. There's more I want to discuss on Bitcoin. I'm going to give you guys a contrasting view today, but don't let it scare you because I'm still buying Bitcoin. Okay, remember I'd mentioned to you guys I'd increased my pace of buying Bitcoin. I am still buying. In fact, I've increased my pace even more now. Right? It is completely different from tapping into my emergency fund. We had always planned to have what's the term we use? Dry powder, right? Dry powder. Like oh man, I'm spending too much time on this, but I think it's important. Until you should not run out of dry powder until those 3 things that we talked about in the previous live streams, those 3 attributes that we're looking for, start getting activated. You have no business running out of dry powder, right? So what am I talking about for those of you who are just joining? In the previous live stream, do I have it here? I'm just going to show it to you. In the previous live stream, I gave you guys these points, right? So at least one of these need to activate, one of these, right? Where you start saying, okay, I'm going to tap into the funds that was allocated for the trend beginning. Now, one has activated, but not all 3 of them. So you have no business running out, right? You should have been slowly building a position in anticipation of that. If you guys understand what I'm trying to say there. I'll come back to this in a bit. Now, yeah. So you're allowed to buy, but you shouldn't be tapping into funds that allow you to get aggressive. That's the cleanest way to say it. You're allowed to buy, but you're not allowed to tap into the funds that allow you to get aggressive, right? We're not there yet. Nowhere close. I wouldn't say nowhere close. Hey, will be good to see you. We're at the spectrum. Now, before we get back to Bitcoin, I want to talk about gold. Okay. I've been kind of not all that interested in gold. It's been a year and a half now since I've been interested. The trend now on the dashboard is very interesting. This is where I'm beginning to get keen on gold again. Daily short, 2-day short, 4-day short, weekly short, and the monthly is long. We're looking at the gold ETF over here, but we're going to switch on over to the actual gold chart. And look at the support level, 381. And the ticker is sitting at 390, right? Now I'm going to go on over to the gold chart. I want to show you guys where I'll be interested. I'm trying to think about whether I should start with the low time frames and move up, or go with the high time frame and move down. I think I'm going to go the other way. We've been talking about gold for like a very long time. We've talked about in the C Clubhouse sessions over here, as you guys can see. We've been following it. It helps with our Bitcoin positioning as well. And what we're going to do is we're going to go daily and break down all the way to the high time frames. Okay. So as you can see, daily is looking ugly. It's been in a very ugly trend for a very long time. It's not interesting. Chopping around the daily dynamic, 2-day time frame, similar. We broke it here, retested it here, and it's been down only ever since then. This is not looking good at all. The 3-day, what's the story? Does this look good? Nope. This is in a downtrend. The 4-day, does this look good? Nope. In a downtrend. Looks like it wants to come down lower. At the very least, test 4,100. Weekly, does this look good? Nope. In a downtrend. Bi-weekly, does this look good? Nope. We lost the bi-weekly underneath over here. Looks like it wants to come further down, right? All of this is not looking good at all. Let's go ahead and look at the monthly now. This is where things kind of start looking a tad bit better. Monthly, testing the monthly dynamic, and I'll be looking, if you're looking to DCA in, I'll be looking to start some. Maybe you can start here, but I'll be looking towards the end bidding zone of the dynamic version 5. For those of you who don't know, you can click on the settings and you can click market direction, buying or selling, and use your zone as tight. And this is where you can start buying if you want. I want you to guys buy underneath the monthly dynamic. I mean, I don't want you guys to do anything. Do whatever the hell you want. I would like to buy underneath the monthly dynamic. Those, as you can see, right, buying in these zones over here have been advantageous, provided you're lining it up with a high time frame macro thesis, right? And I think gold still has one more run to go, not anytime soon, but I want to build a position for the next run that may come in 2027, right? For that, we're going to switch on over to the 3-month time frame. This is where it gets really, really interesting. And the start bidding zone over here is where I'll definitely be looking to start building a position all the way down to the end bidding zone coming in at 2,900. So we're looking at 3,500-ish all the way down to 2,900. Those of you who don't have the dynamic, take a screenshot of this, right? I'll give you guys the levels as well. Right over here, we're looking at 3,500-ish. Actually, no, you don't have it there. And at the bottom, 2,900. And the core of the dynamic, the meat of it is coming at 3,200. This has been seeing respect through this entire consolidation underneath, broke above, retested it. In fact, you can say retested it twice, right? Consolidation, broke above, retested it, trend. This is going to be the first retest after a massive trend. I'll be looking to buy the zone. We have to be patient though, okay? Take a screenshot. Do not say I did not, like, I'll give it to you guys now. I'll give it to you guys in a couple of weeks again, right? And then I'll not talk about it again for a few years. It's on you guys to do the rest. Invalidation though, if we do lose the end bidding zone, that's definitely an exit, but you could also exit right underneath the core of the dynamic. If you guys don't have access to the dynamic, it doesn't matter. Here is the chart for you guys. This is not going to change all that often. Okay, so that's gold. Now, next update is going to be on our quantum position. If you guys have been following me in the Mango C program, the C Clubhouse sessions and the private chat, we've been talking about my reservations against Bitcoin having to deal with the quantum narrative or quantum threat narrative. I was more concerned about the narrative than the actual quantum risk, even though the quantum risk is an actual risk that I am concerned about, but it's the narrative and the fear of the technical unknown that worried me, and it got us positioning into a long-term 3 to 4 year position on QTUM on this index to give me exposure to several quantum computing companies that allowed us to be very calm and collected throughout this entire Bitcoin drawdown, because our hedge was working out really, really well, right? You can see how this has done. Why are my drawings not showing here? Maybe if I go down to lower time frames. I don't know why. I lost all my drawings on this, unfortunately. But as you can see, the Trump drama last year gave us a massive buying opportunities. It's almost like 3x, right? We've gone from like 60 all the way to like 180-ish almost. I'm very, very happy with this. We've been buying on every dip, and we've been buying whenever we can, because we've been looking at this as an opportunity to hedge against our Bitcoin position, right? So it's like insurance. When you're looking at insurance getting cheaper and you don't have your entire insurance and you want to buy. And the riskier Bitcoin becomes, the more you want to buy, right? The longer they go without attending to this risk, the more the risk. That's how I'm looking at it at the very least. Now, the thing is, I'm going to be slowing this down in regards to my bullishness. This is the big update for you guys, for those of you who've been following me. I'm not going to be looking to sell anything just yet, but at the very least, I'm not going to be looking to buy any dips that come, unless it's a deep dip, right? It needs to be significantly deeper. Let's say maybe all the way down to 120, right? So any lower time frame dip, I will not be all that interested. And even at 120, I'll be a little bit. I don't think, honestly, I'm not excited to buy this anymore. I'll be allocating instead to the ticker that the report I sent out to you guys last week. For those of you on the C program, I sent out a report with a PDF. It's a 1.5 page report. I try to condense it. It's really well done with like graphics, etc. My mindset on a new long-term position. This is like ultra long, like 4 to 6 years, right? I'm very bullish on that one. Now, the reason I'm going to be slow, long story short, I want to allocate to that one quicker than I had initially intended. Why? Because I realized that our quantum position went up faster than I expected. This went up way faster than I expected. So I don't want to be caught in a similar position where I don't have as big of a size as I want. And let me put it this way. Maybe my read on how fast these things are happening is wrong, right? And the plays are happening faster. So I don't want to be caught in that. I'd rather have my capital waiting for it. I'd rather be wrong on it taking a bit longer than expected than wrong on it happening faster. So I'll be allocating over there. Again, go read that report. And I've given multiple options depending on where you guys are at your juncture in life. And I told you guys what I am buying amongst those 4 options. So I'll be allocating over there instead and not be allocating over here until I see all the way down to the monthly dynamic, maybe even deeper. So monthly dynamic will be interesting. I will not be buying the bi-weekly dynamic retest. I think this could come down and cause some pain. It's also the semiconductor index that is a bit concerning to me at the moment. So let's see. I'm not selling, but I'm not buying anymore either. That's the update on the quantum position. Now we can move on to Bitcoin. Any questions before we move on to Bitcoin? I totally agree, Tan, which is why I've not been talking about gold for a very long time. It's only now that I'm interested again. And I don't want to say that it's completely useless. You can just watch the trend structure here, right? Because you don't need to watch the price action on the low time frames, but understanding the trend structure and the volatility will allow you to place aggression or start DCing out of your position, right? So let's say we build our position on the 3-month dynamic, and then you start seeing the daily flip short after being long for a long time, the 2-day flip short after being long for a long time. You don't need to short into those trends, but you can start DCing out, right? You can start taking profits and wait now for the next opportunity on the 3-month levels. Does that make sense? That would have avoided this kind of situation where this guy's out of dry powder when we're sitting on the weekly 200 moving average, right? What do we do with Bitcoin? On Bitcoin, all we did was I'm going to switch on over to the bi-weekly, switch on over to the dynamic, and said, hey, we're going to follow this trend as long as we're holding the bi-weekly dynamic. And we use the low time frames to increase our aggression at key junctures, but the bi-weekly dynamic was our guiding light the entire time, right? As soon as we lost the bi-weekly dynamic and the trends are flipping on the low time frames too, we reduced aggression drastically. The only time we got aggressive was, again, over here at 62K, down at this initial dump here. And then on the entrance of the cloud, when we penetrated into the cloud. And again, this is really important to keep your biases in check. Weekly cloud. We lost the weekly cloud over here, right? First we lost the Tenkin, then we lost the weekly cloud. That was the big God damn it kind of moment. I was really looking for Bitcoin to make its way up to $100,000 to $2,000 at the very least, $93,000, but did not get there. Oh well, it is what it is. I'm going to exit, right? Now you don't need to exit your entire position, but whatever you did enter within the cloud, you have to exit. You have to exit. You stay true to yourself. The fact that the market respected that and went straight down to the next level, which is the weekly 200 moving average, was very, very telling. Now, you want to be respecting that move and keeping an eye on the weekly 200 moving average. This actually takes us to transitioning to why I think we shouldn't be getting all that aggressive here while still allocating enough to build your long-term positions. When I say aggressive, no leverage here. No leverage, but you still want to respect the fact that the weekly 200 moving average has been a really, really good long-term buy. The monthly stochastic that we're going to come to is also a very, very good indication of a good long-term buy. That being said, there are a couple of things that I talked about a while ago that I want to bring back to your attention. One of them is the 3-day cloud, if you guys remember. Gonna flip only to cloud. Okay, so if you guys remember all the way back at in Jan, actually earlier than that, we were talking about once the 3-day cloud flips red, we have to be very, very careful because that has always led to a prolonged bear market, or rather a aggressive bear market, right? And I did a back test for you guys. And remember, for those of you who don't know or new to the cloud prints ahead, right? So as you can see right now, the cloud is sitting all the way in September. The cloud's print is sitting in September. So when the cloud flipped red, you go 30 days back, we were at around somewhere around here, 93,000 to 88,000, right? Somewhere around this juncture. That's when the cloud flipped red. We retested the green cloud and we had the drawdown. But we went through that experiment, right? We went through that backtest and said that historically, every time the cloud has flipped red, it has led to exactly that move. Flipped red here, down move. Flipped red here, had a down move, rallied, and then down move, right? Flipped red here, had a down move, rallied, and then had a down move. Flipped red over here, rallied, down move, right? So we're looking for something very, very similar. Do we have a, over here too, actually, this was 2022. Flipped red here, down move, rallied, down move, huge down move, right? Again over here, flipped red, retested, down move. Do we continue? The next bearish thing that we did not want happening has just happened as well. If I switch on over to the weekly cloud and I'm going to turn on our Tenkin within the cloud, you're going to see that the Tenkin now has penetrated underneath the cloud. This is not something I like, because every time the Tenkin has penetrated underneath the cloud and followed price, it has led to an aggressive downtrend, right? Over here you guys can see, right? Huge down move after that. Over here as well, huge down move after that. Over here as well, huge down move after that. Now, I don't have as much conviction on this one as I do on the 3-day signal that we put out at 95k-ish, 92k-ish. But it's still a concern to me. And until that unwinds, I do want to be a bit cautious. So I am uncomfortable right now and I'm buying, right? But I'm telling you guys that there are all these things going against Bitcoin right now that could cause a further down move, and it could lead to those emergency prices. And that's when you want to tap into emergency fund. If even, these are not emergency prices, right? Emergency prices are Bitcoin sitting at 32k or something like that, like another 50% drawdown from here. This does not want emergency action. You guys should not be treating this that way. Right? But at the same time, you don't want to be ultra scared either. I did talk about the key things that we should be looking at. Let me just go find the figures right here. These are the three major triggers: bi-weekly dynamic, price over the 10 SMA, price over the 21 EMA, and then the monthly stochastics. 2 out of the 3 are not active. We only have 1 of these that are active. Out of the optional indicators, we have 2. We have the 200 moving average with a buffer percent of your choosing around the 200 moving average. Choose at least 20 to 25%. And then we have the monthly dynamic. Out of these 2, only 1 of them is active, right? So we're going to go through all of them right now. So we're going to do this on the reg. So you guys are following me on this and you guys don't do anything stupid. It checks your biases, allows you position with bullishness, but with cautiousness. Allows you to be bearish, but not overly bearish. Choose which direction you want to lean towards. Know that we're on a spectrum right now. We're not entirely bullish, we're not entirely bearish. Where you want to lean is on you. Now we're going to start with the bi-weekly dynamic, the first one on the list, which made us a lot of money throughout the entire cycle, last cycle. Hopefully can serve us the same way this cycle. Looks like it has been so far, because we lost it, retested it, rejection, drive down, tested it again, unfortunately, rejected it again, and now drive down. So bi-weekly dynamic is not giving the trigger to get bullish. The next one is price over the 10 SMA, 10 SMA over the 21 EMA, right? In that order. So we're going to, this is for the monthly time frame, by the way. So switch on to monthly, switch on your Mango Ribbon. By the way, the Mango Ribbon is completely free. It comes with a bunch of indicators embedded into it. It allows you to use the free trading view without having to upgrade and have a bunch of indicators within one indicator. You can get the Mango Ribbon by signing up to the newsletter in the description below. It should be in the description below. If not, it's the mangoway.com/mango juice. I think the mangoway.com/mango juice gives you access to the Mango Ribbon, the latest version of the Mango Ribbon as well. So what are we looking for over here? We're looking for price to be above the 10 SMA, the 10 SMA to be above the 21 EMA. It needs to be all 3, okay? Again, as an example, this does not count because you have price over the 21 EMA and the 10 SMA, but you do not have the 10 SMA over the 21 EMA. You need the red line to be above the yellow line as well. Until then, it does not count. So over here, we have none. We have the opposite, in fact. We have price underneath the 21 EMA and the 21 EMA underneath the 10 SMA. So it's not all that bad, but we're going to get this cross soon. And that's likely going to... yuck. This is yuck. But here's the good news. One of the strongest indicators that has been really good for timing the bottoms is active. right? So we don't have the first two, but those are delayed indicators. Those are strong, but they're delayed. This one's strong and it gets the bottoms really, really well, right? We're going to go and mark out whenever the stokes, I'm going to turn off the Mango Mother. We do not need that over here. Whenever the stokes have bottomed, we're looking at the bottom over here. We have had some really, really good rallies right over there, right over there. Kind of just like marking it rough, right over there. And now, does this count? Right? It doesn't need to get it exact. In fact, if you went and marked it over here too, at this move, like you would have got somewhere around 67K, right? And maybe even this wick over here. Because while it was printing, this blue line was probably way lower. Because remember, the stokes are printed based on a candle closes basis. So during the wick, it was probably all the way down over here, and you would have probably bought at 58K. If that ends up being the bottom, if we double bottom over here, the stokes would have nailed it one more time, right? So remember though, there is the possibility that the stokes stay down here and price keeps going down. It has not happened yet in Bitcoin's history, but it could happen. So this is not something to go all in on, which is why I have these three as our confirmation, these 3 points over here, right? If this was enough, I'd be like, guys, I'm posting this on Twitter. Here's my 1,000 likes, 1,000 retweets. This is the bottom, right? I'm not going to give you those kind of certainties because they don't exist. What I'm saying is this has lined up with cyclical bottoms in the past. 2, it is not enough though, because the stokes could stay down here and price could go lower. But the combination of the stokes bottoming and then we activate these guys over here, bi-weekly dynamic and price over 10 SMA over the 21 EMA, that gives me reasonable confidence that that is the bottom. Because now the combination of the two gives me trend and oversold structure, right? So I hope that makes sense to you guys. If not, you can ask me any questions. Now, the optional indicators, 200 moving average plus the buffer and the monthly dynamic. We're going to start with the 200 moving average on the weekly, turn on the ichimoku right over there. We were talking about it, and you want to add a buffer. This buffer is moving as price moves, of course. So you go 20% to the upside, 20% towards the downside, and that is your zone where you should be willing for Bitcoin to bounce and say, hey, this entire zone is my long-term 4-year buy zone, right? So that is active, right? So out of these guys, we have 1 and 2, sorry, 1 and 2, and you don't have this one, you don't have this one, and we don't have this one either. What's the last one? We haven't gone over that yet. That is the monthly dynamic. This one's a good one. We did not use it last cycle because I wanted to see how it would perform. I'm going to use it this cycle likely. Also want to give a shout out to R2D2 for the 10 weekly dynamic, which is something we'll follow, but not in today's video. So that's coming at 76K. If you can close monthlies above 76K after bouncing off the monthly to the weekly 200 moving average, that'd be a strong signal for me. Right? Yeah. Does that make sense? I hope so. I hope so. Okay. I think I covered all of it. So I went over the good and the bad and the ugly as well. Let's go on over to hype. In the last few live streams now, the one with Krisha, when price was sitting at around 73, 74, Krisha asked me, Sean, would you buy the breakout over here? I said, no, I don't think so. I mean, I personally would not. You guys can do it if you want to, but these breakouts have not been a winning strategy for 3.5 years now. What has been a winning strategy is to bid on the trend, which we did, right? I've been screaming about buying the 4-day dynamic, and if you guys look at the newer version of the dynamic, this entire zone was a buy zone. Retest, massive bounce. What has been a winning strategy, guys, has been allowing price to break out and come back into the range and test a trend level within the range. If you did that, there's a high success rate, not foolproof success rate, but a high success rate. And you can use that level within the breakout zone, within the structure as your invalidation. This becomes amazing for me. Why? Because I'm now allowed to bid the 4-day dynamic. If we lose that, I exit that position and I exit the rest of my trade as well, which we collected along the 4-day dynamic. So I'll be very, very happy with that. I'll just exit that position. I'll add here. We lose the 4-day dynamic. I'll exit that position along with the rest of the profits I have over here. So that's what I'm doing. It looks like it's coming down over there now. Patience pays. Here's the thing though. If you use the newer version of the dynamic, we're almost at it, right? I don't want to call this a new version. It's been out for like 6 months now, right? Everyone's probably, you guys have probably switched to this, right? If not, switch to it. Because it has been extremely advantageous to use the market direction zones over here. During this entire zone, we never really touched the core of the dynamic. We were rewarded for using the start bidding zone as our way to DCA into the position over here, as well as over here. We kind of got to it, but not entirely to the core of the dynamic. But if you bought into the zone, you were fine. That's a sign of a very, very strong asset. Very strong asset, right? It's not coming down. It's getting picked up really quick. So if you guys are not in position, buying over here is completely fine, like around 50-ish, 51, 50-ish, right? I'll be waiting for here likely. Hey, Sai, good to see you, man. Been a while. We're almost done though, so make sure you rewatch the stream. A lot of useful and very important information in here. Now, Cardano, update for you guys on this one. We did talk about this yesterday. I think it's reaching towards 13 to around 50. Basically what we said, I don't know why it's not updated here. We're looking, this is what you guys do. Zoom in, mark out this candle close over here, mark out this wick over here, that wick over there, and then what you want to do is mark out a zone like this, like so. You zoom out and you stretch out that zone, and that's your bid opportunity, your support zone at the very least. And it's tapped it, right? It's tapped it. You don't want it losing this level. If it loses this level, I think it comes all the way down to 10 cents to 9 cents, right? 10 to 9 cents. It cannot lose this level. So this is worthy. I wouldn't say worthy a trade. It's reasonable to try for an SNR trade over here, because what's the upside? If you get the bottom at 13.9 cents, that's a good 89% move. Yeah, that's definitely worth it. Because think about it. You can manage your risk somewhere around 12.77, right? Manage your risk there. And then look for 20. Let's go to, let's see, okay. What I'm going to do is I'm going to switch on over to the 2-day on Cardano on the dashboard. By the way, you can find the dashboard on app.mangoresearch.co. Yeah, and I'm looking for the Mango Horizon over here. Mango Horizon also says support zone. It's loading now. Bearish regime. Wait, let me refresh. Oh, damn it. So my Chrome, if you guys see this issue, because we updated the dashboard, I'm having this issue because what you want to do is clear your cache. I don't want to clear my cache because I'm going to lose my save passwords, etc., and I'm too lazy to do that. But yeah, support zone over here on Cardano, lining up with the dashboard on the Mango Horizon. Your stop would be at around 9 cents though. This is too far. I wouldn't use that as my stop. Bearish regime though, Mango Pulse. Would you want to really trend trade into this one? I leverage trade into this one. You definitely do not want to leverage trade into this one, in my opinion. What I would do, if you have conviction on Cardano, I would buy this spot and look for that move over here, all the way to 25 cents. Maybe you can take profit around 22 cents. Do not hold though. Do not hold a massive 90% rally into the zone. Take some profits. Don't sell the entire thing. Take some profits at the very least. Okay. A lot of people gave me hate when I was not optimistic, to say the very least, on Cardano when we lost these monthly levels, right? You guys can see why now, because you can have double the size. Hell, over here, you could have had massively more Cardano if you had just waited for this level over here. Now, when people should be buying, they likely don't have the dry powder to buy. I'm not saying it's definitely going to bounce over here, but over here, you can manage your risk Over here, you could not manage your risk because we broke underneath, right? How do you manage your risk? There's nothing to manage. You're literally buying against resistance. Over here, you could have managed your risk. Why? Because you're sitting on the support, right? So if you lost the support on the next monthly candle, you just exit. But if you did not and it started bouncing, look at the move you captured. 217%. This is why TA works. If all you guys use is fundamentals, you guys will be bag holding at the worst times. You won't get to buy when you should be buying. You won't be doing the community a service. You want to be a good community member of the Cardano community, of the XRP community, know when to buy, know when to sell, because they need you to buy at zones like this, 15 cents, 13 cents. Then you make a lot of profit too. Maybe someone wants to buy at this zone over here and they need the liquidity. You're being a good community member by selling to them and giving them the liquidity that they need, right? Because, hey, they want to buy. Cardano fans want to buy, so let them buy here. Take some profits. That way you build for the next rally down and you get to buy more and you help the community out when they need you. Don't buy into resistance. Don't buy into support. This is why TA matters, whether you're a fundamentalist or not. And I am a fundamentalist. I believe in fundamentals too, but I still use TA as my guiding light. So yeah, it's a good time to be a buyer. Why? Because you manage your risk underneath 14. If it loses 14, out. XRP, same story. Not the same story. Looking way better than Cardano. I'm sorry to say, Cardano fans, XRP is looking way better. It's holding its levels, right? It did not lose its level. Cardano lost its level months ago. XRP, still holding. But it needs to hold this level on the monthly time frame. We're looking at $1.11. If it loses the $1.11, I'm looking for it to come down to around 70 and 80 cents. Now, you guys better not freaking start hating on me if it loses this level and I start calling 80 cents, okay? Because that's just how we work as risk managers, right? If it reclaims that level at $1.11 after losing $1.11, let's say it closes underneath here, right? My eyes will be looking down. That's the rules. I don't make the rules. I follow the rules. The rules are eyes look down, right? If, however, it shows me strength and it fails to break down and the bears can't push it down and close above, I'm like, whoa, that's bullish. I become a bull. I'm looking towards $1.63 and most likely $2. Most likely $2, not $1.63, but can take some profits there. Here, however, it's not lost the level yet, and you have like 20 days before it loses the level. So your eyes should be looking up, right? Your eyes should be looking up over here. If you guys don't have the patience, then this game is not for you. Okay, just go elsewhere. Go chase the new shiny ball, right? First you guys chase silver, then you'll chase gold. You'll chase something after it's run, not when you're supposed to be looking at it. Not like how we are looking at gold now, waiting for it to come down, of course, to the 3-month levels when everyone's forgotten about it, right? People chased this entire rally, bought the tops. You guys will be chasing it. When you're not supposed to. Why? Because you want to lose money, right? You guys don't want to make money. You guys want to lose money. Deep down, you guys don't lie to me. You guys all want to lose money. I know it. I know you guys want to lose money because you guys do the stupidest shit. Now when you guys should be paying attention, you guys will be giving people hate, right? This months and months of XRP going sideways when it should have been losing this level, sign of strength in my opinion. It could lose over here, its level, and then I'll flip bearish. Hate me for it if you want, but that's how I risk manage. At the moment, it's looking like it wants to hold this level. Let's see. It could do this, by the way. Could do this. And then this, right? And then you'll wish, oh my God, why? Why didn't I buy at $1 when I had the chance? Those geniuses on TikTok bought and I did not. And now it's rallying all the way to 2, puts in a high low. I'll wait for the dump back down to $1. Nope. No dump, back to 3.5. I missed the whole thing. You know what? I think this is the new paradigm. I think XRP is going to go to $10 and you buy 3.5 and boom, it's all the way back down over here. So you missed a good 300 to 400% move and you have no one to blame but yourself. Why? Because you did the same thing that you did over here on gold. You did the same thing that you did on silver. Do not lie to me. I know you guys all did. You bought over here instead of buying over here. Kusha was screaming for silver during this entire phase. Here? No, not here. Somewhere here. Yeah, here. Kusha. Yeah, but anyways, Cardano done, XRP done. Is there anything else I want to talk about? No, we are done. I don't understand why anyone would make a decision on ADA fundamentals. They haven't produced anything since it came out. I have no idea, man. I don't know anything. I don't even know what Cardano does. I think it's a chain that is proof of stake, and that's it. Right? The best way to make money in the markets is to not follow too many fundamentals, because you follow a few that you believe in, like properly follow it. Don't borrow your conviction from other people though, and use other coins that have good trends like XRP, Cardano, etc. to build your positions on coins your conviction on, whether that be Bitcoin or Ethereum or Tesla. Oh yeah, speaking of Tesla, Blag wanted to talk about Tesla and Oracle. I'm going to do this one for Blag really quick. So look at this, man. You can just this. We're going to talk about the high time frames and then the low time frames. Okay, actually, start with the low time frames. Low time frames not looking the best at the moment. I think the market is trying to sell into the SPCX thingy that's coming out soon. The IPO. I think it's in a few days, right? So market's a bit spooked out with all of that liquidity vacuum, and Tesla and the rest of the market is facing the brunt. So we have this rising channel that broke down over here, retest and drawdown. If we do get an opportunity somewhere around here, I'd be a willing buyer. If we do lose on low time frames, we do lose this trend Blag, right? I want to go ahead and draw it out for you right there. So we have this massive rising channel, right? And we're seeing a bit of weakness over here because it did not get to the top of the rising channel, right? And now this bounce here broke down as well. So this is what you guys need to be keeping an eye on. If we do this and we do this and we do this, we could break that zone that I just marked out. If we do that, we're likely going to retest somewhere around 397 and come back down to this red zone. Over here, maybe even 202, I'm going to be looking to load up for a ultra long position on Tesla. These buys over here are for your like mid time frame position, so I wouldn't be buying all that much if you're buying spot here. If you're buying for long term, I wouldn't be buying all that much. If you're buying with the intention of exiting if it doesn't fail, then you can buy size over here, right? But this is the zone where you want to load up 240-ish to 250-ish. If it gets down, I don't know. It could bounce here, and I don't know. So I'll give you guys the bull case for it bouncing over there. If you go on over to your monthly, hide all of this. Actually, the best way for me to do the thingy on Tesla is to do a fresh chart. And then we'll do Oracle after this. So this is like really, really obvious, right? What's going on over here. I don't need to spend too much time on this one. And then I'll take a square. Oh, I can't twist this though. I need the rotating. There you go. You have a bull flag. And if that lower time frame structure that I showed you, that rising channel, fails to break towards downside, this could break towards the upside. And if that happens, you can actually take this little guy over here and put this here. This is ridiculous. And you're looking at a $9,000 eventual target. You guys call me a bull chart. I've often said that Tesla is going to get to a multi-$1,000 price per share. I don't have a fixed target though on 9,000. It's possible. Who knows, right? Could happen through money printing, massive productivity, Optimus being a massive, bigger success than people think. Multiple ways, but honestly, it doesn't matter. Like, do you need 9,000 to? What if we are only 30% right? Right? We want to be only 30% right. So we'd be looking at even a $2,000 target, right? I would not be all that surprised. Fundamentals mean nothing compared to market direction and structure. 100%, man. 100%. It's the market telling you something about the fundamentals that you probably don't know. Finally, we're going to Oracle. Oracle is really simple, Black. Like, at least for me, I'm not overcomplicating it. For those of you who don't know, in the seed private chat, we posted a analysis on Oracle where I said that this is pretty much a no-brainer trade for me. We very, very rarely get, like, there was a lot of FUD on Oracle too, like about debt refinancing, etc. Sorry, they took on a huge debt position, to go and build out their AI, blah, blah, blah. And my view was, hey, we are literally testing the 3-month dynamic after like a very long time. We get these very, very rarely. And every time we do test it, it has been a massive buy opportunity. So if the 3-month, if TA is my first priority, I flip that mindset around and say, what's the bullish narrative that no one's screaming out loud? Because the narrative always follows price, but we want to be ahead of the next narrative, right? Well, the narrative to me was Oracle is a leverage bet on AI. That's as simple as that, right? If they are borrowing so much money to build out their AI, they are taking on leverage, right? Well, I get to buy spot Oracle without having to actually take on leverage, but get exposure to a leverage bet on AI. That's as simple as I kept in my mind. And that's why we got our Oracle position. It's a huge bounce too from this level, by the way. Already 48%. At its high, it was a 80% bounce. I'm not looking at anything else, Blag. You might be looking at the lower time frames. So let's go take a look. Huge move. It could be coming down to retest this level here at around 188. Maybe 177. Let's get the bi-weekly. It claimed the bi-weekly too, so that's good. You can see how it's like lived underneath the bi-weekly and then claimed it to continue the trend, right? You want to use the 3-month trade as your way to build your position and the bi-weekly as a momentum booster. Yeah, I honestly just keep it simple, Black. Follow the 3-month on this one. All right. Any requests, guys, before I wrap up? I'll do 2 altcoins. That's it. Actually, no, I don't have time for 2. I'll do 1. Just give me 1. Minja Jurin says, what if someone is bag holding Cardano in a higher price? So how high are we talking about here, Min? I'll go switch back to Cardano. The thing, right, it's really difficult in crypto, guys, for me to give advice on what to do with a bag that you are still holding from a while ago, because often crypto, it teleports itself from one level to another level, right? It doesn't, it's not like it very rarely do you get the opportunity where it breaks a level and stays there for you to sell into it for like months. In fact, Cardano gave you that rare opportunity. Like, this doesn't happen often, guys, where you break a level and just stay underneath it for like multiple months. This was an opportunity to sell. Like, you should have been selling around 24 cents if you hadn't sold over here. Like, this was the previous opportunity to sell. Why? Because you had this trend structure that was broken, failed to continue. Like, here, to be honest, was not. I was covering Cardano during this phase, right? This was really bad too. We had an M-like structure. So to go back to your question, it's really difficult. Why? Because it comes down to the next support level, and at that point, you should be looking for a bounce. And at the same time, though, you should not be building bad habits of holding a bag. I've learned that the hard way, right? If you don't learn good behavior right off the bat, right, or you don't behave well with your trade right off the bat, it gets worse and worse and worse. Always remember this, right? Quote me, remember my words. If you behave well now, it will save you pain in the future, in one way or the other, right? You may think that, oh, you know what, it could bounce here. Sell anyways, and then ask yourself, do I want to buy here? And if you say yes, I want to buy here, that's a fresh trade. So if your trade is invalidated, just sell. Even if you think it's going to bounce, just sell. And then buy again if you really want that position, because now it's a new fresh trade with a new invalidation, and you can log it in your journal in the same way. Often you're going to find that you're not willing to buy, right? Because over here, look at this, right? Really good example during the previous market when we were following Cardano back then too. This breakdown was very obvious. Over here, you should have most definitely been selling. If you sold, you would have not felt the eagerness to buy there, 100%, right? Now over here, let's say you sell, you may want to get back in and say, okay, it's a fresh trade. I really like Cardano. I like this over here. I was forced to sell because it's good behavior. It's good behavior to just exit and now enter again because it's a brand new trade. Once you get into the mechanical habit of telling your body, telling your mind, it's okay to sell, it's okay to exit, it's okay to take the loss and log it, right? It doesn't matter, because what the funds that you have right now is the funds that you have, right? Like the value of Khaja, people say, give you that bullshit, oh, it's not a loss until you sell. That's complete crap. It's complete crap. What you're worth is what you're worth right now. Your equity is what you're worth. Unless you're worried about tax loss harvesting, etc., or rather taking a capital gain, and you don't want to do that. Over here, in fact, is the opposite, right? You maybe selling allows you to harvest some tax losses. Tax loss harvesting, the term. So my point is, getting into the habit of just following your rules will pay you dividends down the road. Dividends. Then you're never ever back holding. That's the advice I can give you, Min. XLM. Always start with the dashboard. Start with the dashboard. It gives you a bias on the trend and why is this? Oh, that was loading. My bad. Oh, this is actually better than most assets. That says neutral. That says short across all trends. This is neutral across all trends. Support says 18 cents, and price is currently sitting at 18.5. So it's sitting on the dashboard key support level. So this is like your market, your trend-wide support level. So let's go look at the chart now. The thing about XLM is that it looks good and bad at the same time. The reason it looks good is because it had a massive impulsive move that usually is indicative of a new run, but only after, of course, a pullback and high low, right? So if you're doing Elliott wave analysis, you'd likely be saying that, hey, this is wave 1 into wave 2. This is a good bid zone, by the way. Bottom of the dynamic as well. Wave 2, and then you have your wave 3, something like that. I'm not an Elliott wave expert. And then you have your prolonged wave 4 into wave 5, right? So this looks good because of that. You have your first impulsive move, and it's testing a key bottom of the key trend level. It reclaimed the trend level too. Really good. Why does it look bad? Because if you switch on over to the monthly time frame, right, this is a downtrend. You have your high, you have your low, you have your low high, you have your lower low. Now you put in another lower low and another lower high. So until the monthly starts putting in a higher high and a higher low, you're not gonna have that confidence, right? But the thing is, if you look at what I just drew out on the, I'm gonna clear out the dynamic here. You just look at what I drew out on low time frames in regards to Elliott wave analysis, you're going to see that if this ends up being wave 2 that leads to wave 3 is going to take out that high, and then you're going to have that structure for wave 4 and wave 5, right? So wave 4 and wave 5 will come in after the fact that the trend is already put in place. So you would have missed out a little bit of the run. You could use that structure here, saying that the weekly dynamic is going to be my invalidation for this wave 1 being not a wave 1. Essentially wave 1, wave 2, right? This needs to hold and then goes to wave 3. So you're gunning for that wave 3. That's if you're using Elliott wave analysis, right? But the real thing that we're looking for is essentially a trend reversal of the monthly, right? You're looking for this monthly trend to convert into an uptrend, but you're using a different concept to boost your probability. You also have support over here, this block, right? You say, I don't want this block being lost. So I would use my invalidation, either the weekly dynamic that we just had on, right over there at, let's say 18 to 17 cents or 14 cents. 14 cents invalidation. That's a huge buffer. But if you're looking for a huge run to like 50 cents, maybe even higher, because this is wave 4, right? Then you're going to maybe have wave 5 take you to $1. Who knows? All right, I'm going to wrap up there. Long stream. hour 50 minutes. I hope you enjoyed this one, guys. Keep it mango, keep it easy. I'll see you guys in our Discord. If you have any more questions, themangoway.com/Discord. Love you all. See you guys in the next stream on Friday. So day after tomorrow.